Hi, welcome to this video day, which is on the 24th of March. It's Sunday. I'm just going to be going through our favourite trade setup of all. Now, in terms of this trade setup, whenever we see it, we will trade it. It just offers such fantastic risk to reward. And I'm going to demonstrate it on a pair today, which is USD MXN. It works on any currency pair. Okay, logic of the trade setup and the way it works is easy to understand. It will get the odds on your side longer term. Okay, now what it involves is basically just simple technical analysis combined with a trading tool which tracks sentiment. The trading tool is the COT net traders positions, and it tells you the actual positions of smart money in the markets. It's a totally free tool, and what we want to do is look for smart money to be heavily one way, and though the smart money for us is commercial hedgers, I'll explain what this means in a moment, and speculators to be opposing them with their positions. Once we see a big divergence between the groups, we'll go with the smart money, use simple technical analysis to time our move. Now, I'm going to go through the trade setup in a little bit of detail. Now, in terms of when I'm doing my analysis, please do keep in mind it is my view as of right now. It can change in line with the market conditions if you want. All our trading techniques, our COT analysis and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Now what we're going to do is go and look at the trade setup. Before I draw levels of entry, stop and target in terms of USD MXN, I want to look at the COT net traders positions first and why they point to a really big move in this pair in favour of the smart money commercials. So let's go and take a look at the trade setup in more detail. Some COT net traders positions before we go and draw levels of entry, stop and target. Now I've made a point for new viewers here on the COT. It's always the foreign currency first. So we're looking at MXN USD. We of course trade USD MXN. Okay, so the other way round, and we'll put the chart the right way round in a moment. This chart is just to see what commercial hedgers, the smart money, is doing against large speculators. And I've highlighted three divergences. What we're looking for is the smart money commercials to go heavily against the large speculators. When that happens, it will normally break in favor of the commercials. Now, this is not a timing tool, okay? We have to time technically, but the divergences alert us to the trade setup. Now, if we look at trade setup A, you can see the speculators very long the peso and short the USD. Commercials short the MXN and long the USD. Big divergence. We peak out and we see a nice move to the downside, okay? B, it's a smaller divergence, but again, it goes in favor of the commercials. This week, if we look at the divergence, the specs have gone above this divergence A. Really big buying, commercials really big selling, and the peso has come off. So we're expecting more selling of the Mexican peso, so the USD to go up on the MXN. Yeah, so the commercials really indicating that this should follow through. How far could it follow through? Well, it could follow through all the way to chart lows. Now, obviously, this chart is the wrong way round. I'm going to reverse it the right way round, and we're going to draw our levels of entry, stop, and target. All right, on the USD MXN, got the chart the right way round now. And we know the speculators are heavily short the USD, and we saw a nice move up on Friday, commercials really long. Now, just before I draw my levels, I just want to go through these 5 points because they're very relevant to what I think is going to happen in this pair. The long spec Mexican peso position, which we just saw, is at record levels on the COT. Now, we'll point out it's not a record divergence between specs and commercials, but the fact the specs have got more longs than at any time on the COT is basically pointing to a big move up in the USD. Now, in terms of the Mexican peso, it's extremely overbought generally, which points to more upside in the USD. We take this point here, number 2, from the start of December when the market began to price out any Fed rate hikes for 2019, the peso is the best performing global currency of all, by far. And why has it been so strong? Well, it's simply up on an attractive carry trade. If you sell the USD on the MXN, you pick up a really good interest rate differential. And that's very attractive when you have low volatility in Forex markets. And generally, volatility has been very low. It's a multi-decade lows in Forex markets. So, speculators who sold here not only got the interest rate, they got some capital appreciation. When the USD went up a bit, they're still cushioned by the interest rate. Then they make a bit of capital appreciation. Too many come in short, and here comes the rebound. Okay. Now, that is the only reason the MXN is strong. It's got nothing to do with the Mexican economy being strong. It's not strong. I'm not going to go through all the fundamentals of Mexico here, but just say it's not strong, the economy. So it's only the carry trade and low volatility that has kept the MXN strong. It's now vulnerable to risk off. On Friday, the US bond market pointed to a recession. That spooked investors because the US, the Fed were very dovish in their meeting this week, and the US pointing to a recession, or the US possibly going into recession. That's terrible news for the global economy. You saw stocks sell off. There's problems all over the world, which I've noted in previous videos. Risk off means the MXN is very, very vulnerable to capital outflows, and speculators could exit on stop. Now, I featured this trade setup in numerous videos. It's one of our favorites. Big sell-off, high volatility on the Bollinger Bands, and we drop outside of the band. This is on the dovish Fed, and basically interest rates pointing to a recession. We do come off the lows. Okay, our view is basically to come back in through this outer Bollinger Band. This blue candle tail doesn't get to the red. Selling is exhausted. We'll go long very aggressively through the outer band here, and then we move up on Friday. So that our entry level basically just through there. Very aggressive entry, but we can do it because we know the COT. And the COT last week was pretty extreme as well. Now, in terms of just draw trajectory in, if I can get my line straight, you can see a nice blue candle, nice reversal. Specs are bailing out on stop. Where would you come in if you wanted to come in fresh to this trade? Well, my own view is wait until we clear this level out. Okay, you want to follow through. You want it to go through the 20-day moving average. We always look for a break of the 20-day moving average if we're bullish to confirm our view. We've come in early on the turn, okay, but we'll probably add above this level. And then I think speculators, they'll all bail out on stop, and that'll push the USD higher. How high could we go? Certainly here, but the way this looks here, point number 1, I don't think we're going to stop. I think this is 1964. We're going to go higher. We're going to go to 20. Okay, and then we're going to go, in my opinion, up to 2050. So it's an attractive risk-reward trade. And I think if we do break out, your stop doesn't have to be back here, okay, behind this support. I think 19 will act as support, okay? So basically, sorry, I'll just draw my line straight. Basically, we had some support here, which was broken. These two candle bodies behind here, but well back, something like 1895 or 50, something like that. Well clear. This is a volatile pair. For fresh trades, buy the break. out. You could buy the dip as well, but the breakout is the high odds trade in my view. You've got a risk to reward of well over 3 to 1, almost 4 to 1 to first target, and up to second target it's about I think 7 to 1. And yeah, USD MXN, it's a fast moving pair, it's volatile. I think it's a good opportunity. And in terms of the Mexican peso, actually, this pair, we haven't got anything out of it this year, really. We tried some long trades, stopped out one with a decent loss. 2 other trades, minor profits. I'm looking for hopefully to get a really nice profit out of this trade. Now, I've said it in previous videos, you can just trust the COT and time with technicals. I always like to look at the reasons why I think the commercials are bullish, and I think this is the reasons I've listed are why the commercials are so bullish. So looking for a breakout, and yeah, I think I did a video on this a few weeks ago. I was looking for a breakout. It didn't actually break out. It was here and it came down. I wanted to go through 1950. I think, yeah, really good upside in this pair, and looking generally for volatility to pick up next week. COT, most valuable tool in Forex trading, as I always say. You know, you can always do trades off the COT. Your risk is always generally low if you're wrong, but your reward is really good if you're right. And for me, this is a really good COT trade setup. So do I need to say anything else? I think that's all I need to say about this pair. We will see how it goes, but really like the look of it. Could be in for a volatile week ahead. Thank you very much for watching me as usual. Take care. Have a good day.